There's a question we're supposed to do in regards to assets held for sale before we go to the discontinued operations. So someone to remind me they're sitting. There's a question I've mentioned to you, which you are supposed to check. Kindly remind me the question. Which question was this? We wrote it there. Nani yako nayo atukumbushe? November 2020, question 3B. Thank you. November 2020. Question 3B. So let's be there. Page, which page is this? Which page would that be? November 2020, question 3B, page 64. So please open page 64. Page number 64. Page 64. Hii yangu ni hiyo page kweli? Mine is page 63. Yeah, mine is page 63. So I hope everyone is there and you'd allow me to read. It says, Uzamat, so this one is on assets held for sale, not really focusing on discontinued. So this is on assets held for sale. So Uzamat Limited is a long-established retail entity which has been operating in the network through a network of retail outlets and an online store. In recent years, the business has been in revenue from has seen its revenue from online stores grow strongly, and that from retail outlet decline significantly. On 25th of June 2019, the board of Uzamat Limited decided to close the retail network at the financial year end of 31st December 2019 and put the building up for sale on that date. The directors of Uzamat Limited are seeking advice regarding the treatment of the building in the statement of financial position, as well as the treatment of the trading results of the retail division from the year ended 31st December 2019. The following figures have been provided as of 31st December 2019. So the provided figures, can you check them? Check those figures which have been provided there. So in the provided figures, they have given us the carrying value of the building, fair value, less cost to sell of the building, other expected costs of closure. So, you know, the building was hosting the retail business, and now the retail business has been closed. So they want to remain with the Actually, they have discontinued the retail business, and the building from where the retail was being carried out is being put up as held for sale. They want to dispose of that building, and they are saying the carrying amount of the building is 2, fair value less cost to sell of the building is 1720. Then the expected cost of closure is 390. Okay. Trading results. So for the trading result, we have online and we have retail, 2019. Then in the year 2018, also we have online and retail. No problem. In the context of IFRS number 5, non-current assets held for sale and discontinued operations, Roman 1, discuss the conditions which must be met, which must be present in order to classify a non-current asset as held for sale. I think those ones we have them. I gave you like 6 of them the other day when you were telling me you have mastered Roman 1, 2, 3. I want people to give me only 2 answers. For you to classify non-current asset as held for sale, which are some of the conditions which must be present. So I just want you to give me like 2 answers to ensure that we are in the same boat, then we proceed. At least 2 answers. What are some of the conditions? 1, Mercy, the asset must be available for sale. That is true. 1 more, Joy, sale must be done within 12 months. Correct, among others. So it means you know those answers. So my interest is on Roman 2. Roman 2. Draft the statement of profit or loss for Uzamat Limited for the year ended 31st December 2019, together with the comparative for 2018, taking the above information into account, 8 marks. So comparative means you prepare P&L for 2019, also for 2020. That is what they mean. So right there, Uzamat Limited statement of profit stroke loss for the year ended 31st December 2019 and 2018, because they have said with comparative. So comparative means you prepare for those 2 years. So you can have here 2019, here 2018. Shillings are in millions. That. So you will separate them. You will separate the 2. You will give me the results of continuing, then discontinued operations. You know the discontinued here is the retail. Retail outlet is the one which was discontinued, where they were, the one which was in that building. So retail has been discontinued. So when you discontinue, there is no need of giving us all the operating results. You just tell us whether we made a profit or loss from there. But the one which is continuing is the one you will give us the trading result. So you come here and tell us continuing operations. Continuing operations, be specific, online. The online store. The online store. The online store. So from online, you give us revenue. You can see the revenue there. So leave out the retail. So this is 39. Then 2018 down there is 32. Don't confuse and pick the retail. We are taking in terms of years, 2019 and 2018. Then cost of sales is 13. So the difference is gross profit. So gross profit is 26, is 21. You have given us everything. Operating costs. We have 1. We have 8. Therefore, profit from continuing operations, is this is 16, this is 13, like that. Then for 2019, for discontinued, you will not give us their operations. You will just give us a profit stock loss from discontinued. Discontinued operations. From discontinued operations. So once you have discontinued, you don't check the operating results. You just tell us whether we made a profit or loss from discontinuation. And that is the main issue I want you to know. When you discontinue, you don't bother telling us a lot of stories. Just give us the profit or loss from that discontinuation. So the retail business, can you check for me paragraph? Who could you? Where the question started. I want you to check for me. It was discontinued in which year? 2018 or 2019? Please check the discontinuation, 2018 or 2019. Thank you. It was 2019. So in 2018, they made a loss. Check note 2 down there. Year 31st December 2018, they made a loss of 200. I hope you can see the 200 for 2018. Then, now for 2019, we must do a small working. So a small working outside there. Profit stock loss on discontinued operation, retail, 2019. Profit stock loss on discontinued operation, that is the retail business 2019. 2019. All right. So, from operations 2019, retail, you can see there was a loss of 300. I hope you can see that, the loss of 300, 2019 for retail. So from the entire operation, they made a loss of 300. Then up there, they said, they said the building which was hosting retail is also going to be disposed. So when we dispose this building, we must check whether we'll gain or there's a loss on that disposal. So carrying value of the building is 2, fair value less cost to sell of the building. Fair value less cost to sell is the expected amount to be realized on disposal. So when we sell the building, we are expecting to sell it out at 1720. When the book value, carrying amount is the book value is 2,000. So we expect to dispose it at a loss of how much? So expected loss on disposal is going to be 2 minus 1720. So when we dispose the building, we are expecting, I thought I would get an answer there. We expect loss, is that 280? That should be 280. When we dispose the building, yes. We expect a loss of 280. Then other expected cost of closure. So expected cost of closure. They have said 390. So all these are losses. In disposing of the building and the discontinued operations is a total loss of how much? So get the total loss, 300, 280, and 390. $970. Therefore, so this is the aggregate loss. So you bring it here, 970. For consolidated profits. Consolidated profits, how much? $630. This one is 1,100. 1,100. So for the asset held for sale, examiners are very keen. They haven't been very keen on assets held for sale. But what you need to know, when the assets are held for sale, like in this case, the building is being held for sale, it's treated more or less as already being discontinued because it's in that process. So you just separate the two. The one which has been discontinued, you only give us the profit or loss. You don't give us the entire operating results. Then continuing, you give us separately. So in your books, right there, discontinued operations. Discontinued operations. Then get up your handouts, get out the handout and give me like 4 minutes. Sort of something, so get out the handout for group, then go to, I don't know which page, where we have discontinued operations. All right, so back to our handouts. So in our handouts, we are going to page number 7. We are in page number 7 of the handouts. Page 7, where we have written discontinued operations. Where we have written discontinued operations. So it says, this arises when the parent company disposes of its shareholdings in the subsidiary company. This may take place in either of the following 4 ways. In either of the following 4 ways. 1, partial disposal of shareholdings in the subsidiary, with the subsidiary remaining a subsidiary. So when you dispose your shareholdings in a subsidiary, let's say that initially you had 20%, you had 80% of shareholdings, then you sell off 20%. So you see, when you sell 20%, the subsidiary still remains a subsidiary. That's what we mean. So it is partial because you have not disposed of the entire 80%. So you have just disposed a small portion. So in that case, there will be no issue in consolidation because it's a subsidiary, still a subsidiary. So only NCI will be adjusted for. Before disposal, minority is entitled to 20%. After disposal, they get 40%. Otherwise, consolidation, you will still earn the subsidiary in full because it was a subsidiary, it has remained a subsidiary. Number 2, partial disposal with the subsidiary becoming a joint venture, or partial disposal with subsidiary becoming associate. So you are having 80, you dispose of 30%. So when you dispose 30, you'll be remaining with 50. Or if you dispose of 40, you'll be remaining with 40%. Remember, 50% and 40% are associates. We don't consolidate for associates and joint ventures. We leave them off during consolidation. So in that case, you will check. We were having 80% for how many months? So let's say for 3 months, the 9 months it has become an associate. Then this one here, it was a subsidiary. So in preparing P&L, profit and loss account, you will apportion income and expenses for 3 months only in the P&L. Then balance sheet, we will not bring that company because it has become an associate at the end. So balance sheet, it will not appear there because we will only check our investment. We only bring them in the balance sheet when it's a subsidiary. It's just the opposite of step acquisition. So here, that company will be ignored during consolidation. Then number 4, entire disposal of shareholdings in the subsidiary. They dispose of everything. They were having 80, then they sell off 80. So how do we go about that? If they dispose of everything within the year, then like what we have done here, we'll check profit or loss up to the date of disposal. So you will be apportioning. You apportion for the months. It was a subsidiary for how many months before the entire disposal? Then it will not go to the balance sheet. The main concern when accounting for a discontinued operation is on how to determine the gain stroke loss to be recognized by the parent company and by the group. Yes, those two. What should be recognized by the parent and what should be recognized by the group. So, and actually that is the main concern, how to calculate gain or loss on discontinued operations. This is the sister in step acquisition. What we were saying, gain or loss on the recognition, if you remember, on the recognition. So here we check gain or loss on disposal. So I don't want you to rely on the one which is appearing there. I want you to write something. So write for me down there, gain stroke loss. No, what's anyone to me? Straight now. You copy very fast, then we discuss. Just a minute. Something small there. Yeah, that is enough. Please copy that faster, and we can proceed. That is the main issue whenever there is disposal. So nifanyie hiyo chap. Done. One person can just tell me done, then we discuss, we move forward. I hope you're done with that. All right, now, when there is discontinued operation of a subsidiary, you need to determine whether we lost or we gained. And this should be determined in the books of the parent and for the group company. So in the individual financial statements of the parent, you consider the proceeds on disposal. Proceeds is the amount you get when you dispose that company. Then you subtract the investment you have disposed. So initially, you had invested 100 million. Then you have disposed 20% of this investment. So when you dispose 20% of this investment, you check how much have I received. On disposal, we have received 200 million while we have invested this. So the gain is straight. You just check the amount you have received, which you are calling the proceeds on disposal. Then you subtract what you had invested in that company. Then gain or loss in the consolidated P&L. Consolidated now is for the group. So if they tell you gain or loss for the group, you take the proceeds, then you add back fair value of net assets retained, if there is any, which has been retained, what has not been disposed. So if there's something which you have not disposed, you add to what you have received. Then you subtract unimpaired goodwill disposed, your net assets which you have disposed, dividends earned and disposed, if any, like that. Then maybe come NCI were entitled to the net assets, you subtract, but we check. So let's go to illustration straight away without wasting time. There was a question in December 2021. Question 1 of December 2021. 2021 and this 2020 are not far apart. Let's meet in December 2021. December 2021, question number 1. Mine is page 39. So thereabouts. Be there, be there, be there, be there. All right. So allow me to read this question. Allow me to read the question. It says, Pareto Limited is the holding company of a listed group of companies with its year ended 30th June 2021. Pareto Limited has made a number of acquisitions and disposals of an investment. The following summarized draft statement of financial position relates to the group companies for the year ended 30th June 2021. So we have Pareto Limited, Pamba Limited, Dafu Limited. So even before you move, unaona disposal and step acquisition, you have to be always keen with the dates. So they have said the year is ending. Other way I'm here to Apple. The year is ending on 30th June. 30th June 2021. So for the financial year to end on 30th June, it must have started on 1st July 2020. So have that. So direct to Apple. So when it is sending off the subsidiaries, we'll check when for our analysis. So have that, have that. Aye. So the financials, as you can see, Pareto, Pamba, Dafu. Let's go to the additional information. On 1st of October 2020, angalia hiyo schedule yako. 1st October 2020, iko hapo mbele. Pareto Limited acquired an 80% equity interest in Pamba Limited. So 1st October, somewhere here, 1st October 2020, Pareto was acquired. Pareto acquired. Pareto was acquired. So Pareto was acquired on 1st October 2020. Have that. Then we proceed. When its retained earnings stood at 3,500 million. Huh? Not Pareto, Pamba. Thank you. Pamba is the one which was acquired there, not Pareto. Pamba. Pareto is the parent. Thank you. So Pamba was acquired there when its retained earnings stood at 3,500 million. The purchase consideration comprised 1,250 million of Pareto Limited shares with a nominal value of shillings 1 each and a market price of 6.8 each. Hiyo itatusaidia tukitafuta goodwill. You take the number of shares. When looking for goodwill, the purchase consideration, you will take the shares, the 1,250. You don't multiply by the par value, you multiply with the market price. So when determining purchase consideration, you don't use the par value, unless par value is equivalent to market value, which is very rare. So you take the market value times the number of shares. At acquisition of Pamba, the only adjustment required to the identifiable net assets of Pamba Limited was for land, which had a carrying amount of shilling 625 million, less than its fair value. Less than fair value, that is still revaluation gain. It means fair value is more. So that is a revaluation gain of 625. The group's policy is to measure the non-controlling interest at fair value. At the date of acquisition of Pamba Limited, the non-controlling interest had a fair value of 2125. Full goodwill method. So there is no problem. Pareto Limited had acquired 100% had, it means before the year started, had acquired 100% equity interest in Dafu Limited a number of years ago when its retained earnings amounted to 1750. At acquisition, the fair value of the identifiable net assets of Dafu Limited approximated their carrying value. The purchase consideration comprised cash amounting to 5750. No problem. Number 4. Pareto Limited disposed of 60% of interest in Dafu Limited on 1st April 2021. 1st April 2021. So before we proceed, 1st April is somewhere here. 1st April 2021, Dafu disposed. Dafu was disposed there. Actually hizi kwa disposal na step acquisition, hiyo kitu ndio swali. Hizo zingine ni sawa, but if you do that analysis perfectly, you are good. So that was disposed of there. Fine, let's continue. For shillings 4,700 million. So 4,700 million is the proceeds, ile mnaita proceeds. What they disposed it for. That is what you are calling the proceeds on disposal. Of 4,700, when the fair value of the identified net assets of DAFU was 6250. No problem. The fair value of the remaining 40%, you know, it was 100, they disposed of 60. So we are remaining with 40% associates. So the fair value of the remaining 40% equity interest was 4,300 million at disposal. Pareto Limited has not accounted for the disposal. We are going to account for it. None of the companies had issued any shares since Pareto Limited acquired its shareholdings in them. Neither of the goodwill on acquisition of subsidiaries nor the investment in the associate has been impaired. So there is no impairment loss required. A, goodwill arising on acquisition of investment in subsidiaries. So you have to compute goodwill for the two of them. Then B, gain or loss arising on disposal of the investment in DAFU as reported in 1, the individual financial statements of Pareto and in the consolidated statement of profit or loss. Then C, consolidated statement of financial position. So before we start the required, let's do this analysis. How are we going to consolidate? By the way, today I want to pretend I don't know what's happening. Tell me how we are checking both P&L and balance sheets, because we don't know next time the same question can come back. Now we're on a profit and loss account. So assuming the P&L was required, how do you consolidate for P&L before we go to balance sheet? So when I say how, you tell me it is Pareto plus Pamba plus Evo. But here now you have to be very keen as to the months. So how will we consolidate? So write for me the names of the parent and the subsidiaries. I want to see from your side, how will we consolidate for P&L? Someone to show me. That one, once you get it, it means you have the question at your hand. Straight, without even struggling. Once you have that, you have the question. P&L, someone? I'm waiting. How will we go about it? Wengi wewe sema kuna mtu anaweza sema kitu.
Aya, mwalimu.
That is better.
Parent.
No,
plus,
the names.
Pareto.
Pareto.
Yeah, Pareto in full. 9/12 Pamba.
So Pamba, I've not checked, so I'll check. Times 9/12.
Who is oh, dying. Just a minute.
So Pareto in full, Pamba for 9 months. Then DAFU, Mwende. Pareto full, Pamba 9, DAFU 9. So, Mwende amesema. So, Vera, as you check, wacha ni malizie na hiyo ya Mwende hapo mbele, because you are the same, you got the same here and here. So, wacha ni malizie, then we check. So, DAFU 9. And I'm seeing someone has confirmed. So let's check. So for Pamba was acquired here. So Pamba, you check from the date of acquisition going forward. You consolidate from the date of acquisition up to the end of the year. So from October to June next year, yeah, those are 3 months, October, November, December, 3, 6, 9. So that is okay. For Pareto pool, Pamba 9, that is correct. Then Dafu was disposed. So beginning it was there. So that you count from the start of the year up to the date of disposal. So from July to April next year. So April, May, June. So these are 3 months. It means these are 9. That is correct. That is true. So Dafu, you will consolidate for it from here up to there. The reason why we are ignoring the other side, it is an associate. Associates, we don't consolidate for them unless otherwise. And I said any moment in myself, unless otherwise, you know what I mean. So we ignore this space. We take from here up to the date of disposal. While Pamba, we take from date of acquisition to the end of the year. Thank you. That is, in fact, that is quite good for us. Tell me the consolidated statement of financial position. Actually, that is now what is required in this question. So how will we go about it? You get that right, you can even do the question. You will get marks which somebody should get. So can you tell me how to consolidate the balance sheet? The balance sheet. Mercy. Pareto full. Mercy is saying Pareto, parent of course, yes, Pareto full. Pareto full plus Pamba full. What else here? Are you in agreement with that? Can someone confirm? Ndio nisimalize kama watu wengine waseme ati bora wengine washapeana, mwalimu anasema correct. Mwende Pamba. But someone has confirmed Mercy. Yes, yes, yes. I disagree. On my side, I disagree with that answer. Immaculate amesema Dafu. Yes, Dafu was disposed. So it is Pamba full, Pareto full. Period. Kwa nini mnataka kupatia hiyo swali? See, Dafu has been disposed. Dafu was disposed here and it became associates. So the only item you will check for Dafu is your investment. So in the balance sheet, it will go once under non-current assets, investment in Dafu, period. So you cannot, how will you bring Dafu again? And Dafu has become an associate at the end of the year. Once it becomes associate, you cannot consolidate for them. Unless illustrator you are appointing majority of the board members. So in this case, Pareto Pamba. I hope we are clear up to that stage. So now we will not see the balance sheet. And I want you to understand that thing clearly. That is actually, this is the question. Hizo vitu zingine tukienda kututesa huko ndani sijui ya realized profit and the rest, those ones will not matter to me because they are challenging everyone. So if you get this correct, this one, then there are things down there which you will get without necessarily doing a lot of workings. So this is what I want you to get correct. Once you get this correct, you are good to go. No matter how question is hard, you will get some free ticks once you do that analysis perfectly. So for those who are saying that we could have only taken that with the balance sheet if we disposed and it still remained a subsidiary. Maybe, you know, initially it was 100. So it was 100. If we could have disposed 40, you see, it would have remained 60. 60 is still a subsidiary. So we'll have taken it. But, you know, balance sheet, you check the nature of that company at the end. So the nature of Dafu is associate. Associates, we don't take them in P&L, we don't take them in the balance sheet. So you ignore your unaacha. Nani ako na swali hapo there? Who has a question? Before we start now answering the question, you can start asking me the question by saying, in circumstances whereby. It seems there is no big concern. There is no big concern. Yeah, just what if we disposed 50% of that food? Yeah, thank you. What if that we disposed 50? I want someone to say, just what is asking, what if we disposed 50? It was 100, so disposing 50 means we are remaining with 50. What would happen to the balance sheet? Let me start with that one. What would happen to the balance sheet? Somebody? Assuming we dispose of 50%. 50 means we are remaining with 50. So what would have happened? Akimusikwe serious sana. Let's make this thing lively. Ni kama tunapiga tu story pale tukikunywa chai. Hakuna kitu serious. Let's make it more lively. What would have happened? Emma? Unless it is 51%. Ngoja kidogo. Unless it is 51%, then we declude. We don't add the joint ventures. Then Mercy, we don't consolidate for joint ventures or associates. Those two answers are the same and they are correct. So just once it gets to 50, we don't consolidate. We will not consolidate for it. So therefore will not go to the balance sheet. Anything 50% and below, 50% sharp and below, we don't consolidate unless ile story yetu ya kwanza, unajua hiyo story, appointing majority of the board members, those things, we wrote them there. So we don't consolidate for that if it was 50% sharp. Then in P&L, story will remain the same, the way it is here. So even balance sheet will just remain like this, because 50 means it will have been joint venture. Joint venture and associates are treated the same way. So just what I hope that is very clear. All right, so allow me to go to required Roman 1. Allow me to go to required Roman 1. So required Roman 1, that is A. So A of the question, they want us to calculate goodwill arising on acquisition of the investments. On acquisition, so the dates they were acquired. So right there, goodwill on acquisition. Goodwill on acquisition. Whenever goodwill is required, it's required, anything you are posting will be marked. So where was the end of one? After required, what? Goodwill. Goodwill sisi hatufanyani. Najua mnakuanga, you know, sometimes watu wanakuanga na discussion groups. So kwa hiyo group hakuna mtu wa goodwill. So nasema hiyo hatufanyani. So wewe unaenda hapo ukiona goodwill unahepa. Hapana. If it is required, anything you will post, even if you post the value for purchase consideration, that will be marked. So make sure you just know how that format flows. Even if you not get everything, the entries leading to goodwill shall be awarded marks. So have this. To save on time, I will recommend you can compress them together, meaning here we can have Pamba and we can have Dafo at the same time, so that we don't waste on time. Yes. So you start with the purchase consideration, which is the cost of investment. You start with the purchase consideration. So purchase consideration for Pamba, I saw it somewhere in additional information number 1. Additional information number 1, they said on 1st October, Pareto acquired 80% equity interest in Pamba when its retained earnings stood at 35. The purchase consideration comprised 1250 million of Pareto Limited shares with a nominal value of shillings 1 and a market price of 6.8. I hope you are able to see that. So if you don't want stress, you can go to the balance sheet. Check the balance sheet. Under non-current assets, you can see investments in Pamba being 85, in Dafu 57.50. So you can pick them like that. Those are the investments. But we can compute to confirm if it is true. 1250. So this is 1250 by 6.8. You multiply with the market value, not par value. Shares are normally issued at market value. So check for me. 1250 times 6.8. It is summing up to 8,500, which they are giving us in the balance sheet. 85, yes. So this is 85. Then for Dafu is 57.50, which I also saw it somewhere. They gave it in note number 3, additional information number 3. The last bit, check the last bit of note 3. The purchase consideration comprised cash amounting to 57.50. So by posting this one here, you can take, we just talk about it because it is required. Then you add fair value of NCI. Fair value of NCI. I saw it in note 2. The fair value of NCI in note 2, if you check, is 21.25. But for Dafu, hata kama wajatupatia, we cannot, it can't be there. Why? Why do you think it can't be there? I'm not even bothered to check, but I know it can't be there. Why do you think I'm saying it can't be? Who can give it a guess? Why am I saying it cannot be there? That we can't have NCI in Dafu. Why do you think so? Yes. To begin massive makofi. Yeah, they acquired 100%. You know, when you acquire 100, it means they are no minority. You acquired everything. So you cannot have non-controlling interest where you have 100% shareholding. Thank you. Therefore, this is going to be 10,625. This is 57.50. Call it A. You can call it A. You can call it A. Then you less net assets. You less net assets acquired. You less the net assets acquired. Less the net assets acquired. So what are the net assets? Ordinary share capital, share premium, retained earnings, revaluation. Retained earnings and revaluation on the date of acquisition. You know, shares, they don't change. After we scale a certain number, they have never issued shares since the date of acquisition. So ordinary and premium, take them, pull them from the balance sheet under equity. Or in any question, ordinary share premium, pull them the way they are appearing in the balance sheet. Then retained earnings and revaluation, check on the dates of acquisition because those ones keep on changing. So ordinary share capital, ordinary share capital. ordinary share capital, 25.2. I hope you can see them in the balance sheet down there. 25.2. Very good. Then share premium. Share premium. Share premium, we have 1.5. 1.5. Then retained earnings. Retained earnings. For Palmer, check note 1, it was 35. It was 35. Therefore, when they acquired 100%, you will see 1750. Note number 3. Additional information number 3. For Therefore, you will see 1750. Then there was revaluation. Revaluation, maybe if you are, sometimes you will find it called fair value uplift. If you come across such, fair value uplift is simply revaluation. Some people actually, kuna walimu wanatumia hiyo jina. So just in case you see something like that, ama uende kwa mtihani, siku ya mtihani, mnamaliza hivi, then mtu anakuambia, wow, that question was fine. So mtu ametoka shule ingine, si kwa hii class, that question for goodwill was quite fine, except that fair value uplift was not coming up well. Unashaka fair value uplift, hiyo ni nini? Ni kwani nimeanguka? Hapana. Fair value uplift is just revaluation. Utakuwa chapata. So for Palmer, paragraph 2 of note 1, paragraph 2 of additional information number 1, you will see 625. I hope you are able to see it. And on the other side, there was no revaluation. Or revaluation. Therefore, add for me this, call it B. So give me those two figures. Give me the two figures. Imagine unaona watu wanachange tu majina, they just repeat questions. Lakini because of work, students hawakumbukangi. Like I know this class, there are some people I taught FR in section 3 last semester. So there is this question we did in branch accounting called Moshi Limited. Exactly like the same question, akachange tu jina peke yake. Hey, wacha nikutane na wanafunzi after exam. Hey, mwalimu kuna branch nyingine imekuja hapo. Hey, that question, tumeachia tu Mungu. And it was the exact question. So hata hizi wanaleta tu, hii Pareto, wanaweza andika hata Brian. Alafu, hii Pamba waandike Moenga. Alafu hiyo Dafu, waandike Elizabeth. Alafu nasema hiyo kitu ni dangerous. Then they normally divide, either they divide by 2, they divide by 2, or they multiply by 5. Those figures. Then additional information number 1 inakuwa number 5 wana interchange. Watu wanasema ni ngumu. Give me these two answers. These two answers. Nancy, 76.25. Nancy, 76.25. Then we have 42.50. Now, the difference is goodwill. So goodwill will be A minus B. Goodwill is A minus B. Why? It's 100. You know, Pamba, we don't apportion the net assets because in Pamba, yes, I appreciate Pamba was 80% acquired, but you see we have added NCI. Once you add NCI, it is full method. So full, you don't apportion the net assets. This one from the one go, it was 100%. So you take them in full. So A minus B, we get our goodwill. How much? And how much? Hizo maswali watarudia tu. Hata hiyo la sitting nikaa too keen, I can tell you they have repeated which questions. Kwenye tutuna hiyo time. They always repeat. The problem, you don't know which one they will adjust. Wekwa tu sawa. Mtapita kabisa. Aha. Goodwill. The two of them. A minus B. For each. Vera. 3 and 1,500. 3,000 and 1,500. And you successfully get how many marks? 4 marks. So how will I mark the 4? So the 4 should be this way. 1, 2, 3. Sometimes when I go a buyer, sometimes when things are, they want to make your life difficult. Wanafanyanga hivi. 1, 2, 3. Then this one. 4, 5. They mark those totals. So those 5, they tell you 4 times 1. But if people are paying that paper, then it will be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There'll be 10, then any 8 at a half. So it depends. It depends. But you see, in the worst case scenario, 4 times 1 will be even better for you because you will get this, and you will get that. So you got a 3/4, which is okay. All right, let's go to B, part B of the question. Unless someone has a question here, we go to part B of the question. There was no impairment, so okay. So let's go to part B. So B, Roman 1, gain or loss arising on disposal of investment in DAFU as reported in the individual financial statements of Pareto. So gain, stock loss, Pareto. Pareto Limited. So we want to check whether we gain or we lost. Pareto. Hiyo ikwangi ngumu. So in the individual books, which is not consolidated. So in the individual books, it's simple. You have sold it at how much? And what investment have you sold? So you have sold, they sold 60. I remember they sold 60%. So they sold 60% of their investment. For how much? So you come here and say, proceeds on disposal. How much was it? How much was it? Check note number 4. How much is the proceeds in additional information number 4? $47. Yes, that is true. 47, correct. So they received 47, but what value of investment have they disposed? So you less investment disposed. You less the investment disposed. Investment disposed. So in DAFU, parent had invested that purchase consideration. They had invested 57.50. They had invested 57.50. I hope you are aware of that. That was the cost of investment. It was 57.50. These people disposed 50. So 60% of this is what they sold, but they sold it for 47. So what is 60% of 57.50? What is 60% of 57.50? Thank you, 34.50. This is 34.50. So they disposed of an investment. They disposed of an investment with a value of 34.50, but they received 47. So they gained. Gain of how much, students? 47 minus 34.50. How much is the gain? The gain is 12.50. Thank you. 12.50. So that is what goes to the books of the parents. Then part 2, the consolidated statement of profit or loss. So Roman 2, gain, stock loss, consolidated, P&L, profit, stock loss. So have that. So gain or loss consolidated, proceeds. Proceeds on disposal. Proceeds on disposal still stands at 47. They sold it at 47. So that one can't change. That one can't change. Then, whatever they are retaining back, you add. So you say add fair value of net assets retained. I want you to check it for me. What they returned back, that one should be note number 4 still. Note number 4 should have everything. Can you check note 4? Tell me how much of the equity interest or net assets. The net assets is the equity, so it's the same thing. When they're 4,300. Yes, the fair value of the remaining 40% equity interest was 43. So this one here, you bring here 4,300, which comes to 9,000. So that is 9,000. Then you less. So we are going to less, number 1, the goodwill. You know, consolidation now comes with goodwill. There is goodwill to Meuza. So unimpaired goodwill disposed. Unimpaired goodwill disposed. Goodwill, which we have just calculated, we got, it was 1,500, I remember. So goodwill was 1,500. Have it in the first column somewhere there. So goodwill was 15. I don't say that if you put 60% of 15 upon, we have already added this fair value of net assets retained, which is 40. So you don't apportion that. Then also you will subtract net assets. Net assets disposed. Net assets disposed. Net assets disposed. Check note 4. Check note 4. Pareto disposed of 60% of investment in DAFU on 1st April for 47. When the fair value of the identifiable net assets of DAFU was 62.50. So the net asset was 62.50. 50. The net asset on that date, when they were disposing, was 6250. Therefore, hakuna mambo ya dividends, tukiangalia dividends. Here we are reporting 7750. Then you less, out of the 7750, you need to subtract fair value of NCI on the date of disposal. On the date, let me be very specific, on the date of disposal. Fortunately, there was no minority. Just in case there was no NCI in DAFU, it was 100%. But if there was fair value of minority, you know, if minority are there, they also contributed to goodwill. They will also take net assets. You subtract, but that was not there. Therefore, we are subtracting 7750. How much is the gain or loss? In most instances, they should be the same. Sometimes they vary kidogo. So how much? How much is the gain or loss on disposal? Consolidated. $12.50, just like this one here. $12.50. So this is 2 marks, 2 marks. So the 2 marks on the first one up here is this one, 1, 2. This one here, the 2 marks will be 1, 2. This one must be marked 1, 2, 3, 4. So 4.5. So the ticks you get, you will get the 2 marks. Any tick you get is a half. So that is it. So when we meet in our next class, we'll do the balance sheet part of it, which will be easy to connect. There will be no problem. So we'll do part C. But I have to make comment there. By the way, only for this Saturday. Are you capable? We start class at around 5:10. You see, we have a lot of issues. In fact, I'm just squeezing. There is one of my children who is going for baptism on that day. So just imagine, as a parent, the child is going for baptism and you are not there. And they should be there by around 7:30. So I can squeeze from 5:10 to 7:10 to malize class hapo. The same date is my birthday. So birthday hata nimesuspend. Birthday nimesuspend until further notice, until tumalize. So you hata hakuna. So people are saying we can start. Hey, Vera, 4 nimbo. Kwani Vera, wewe unalangi? 5 can be fine. So if you're in agreement, please, you see quarter to 105 to malize by 7 so that I get that time. Kindly. So sijui nani ataamsha watu. Just but for that. I know me, I can wake up, like some people will not manage. Let's be very honest. For 30, unajua kuna watu wanalalanga hiyo siku. You Friday hata ufiki nyumbani mapema. So let's settle at 5. So please remember, for this Saturday only, let's meet at 5. Then I'll finish by 7. Then Sunday will be fine for us. So thank you. Do have a nice day. I'll share these recordings. You can log out. So I just